Hello everyone, and thanks for tuning in for another Market Outlook by ZNSDD. My name is Andreas Soklius, trading specialist here at Exness. Going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week's idea was for a buy on Bitcoin with a target around the 35,000 area. After the aggressive rally of last week, the price entered the range with no significant moves to either side. For the time being, the idea might still be valid if we see any significant push to the upside. Now for this week, we are looking at gold for a potential long trade with a target around the 2010 area. The price is still in bullish momentum despite the recent minor correction to the downside. This is confirmed also from the fact that the 20-day moving average is trading above the slower 50-day moving average, validating the On the other hand, trend. The stochastic oscillator is in the extreme overbought levels for the last 2 consecutive weeks. In the expansion of the Bollinger Bands, which indicates fuel tap volatility, it might take some time for a major correction to occur. Gold prices are trading around the key 2,000 Investors level. Are cautious ahead of the upcoming US Federal Reserve policy meeting and the U.S. job report on Friday that are broadly expected to create volatility to the majority of the instruments traded against the dollar. The Fed is expected to keep interest rates unchanged, but market participants will be focused on Chair Jerome Powell's commentary in the subsequent press release in an effort to get hints about future monetary policy. In terms of economic data for this week that traders will be paying attention to are the U.S. manufacturing PMI and the Fed publication on Wednesday, US job report on Friday, which includes the NFP and the unemployment rate as well as the U.S. services PMI also on Friday. So in summary, the trading idea for this week is a long position on gold with a potential target around the 2010 price area data. The main narrative is the probabilities of the Fed keeping the interest rate stable, as well as major publications in the economic calendar that have major influence on price of the dollar. The economic data that could affect this trade are mainly the U.S. manufacturing PMI, the Fed meeting, the U.S. job report, and the services PMI. Remember, this is not a signal. It's just an idea for a trade. Always do your own research and remember to manage risks.